Your order block didn't hold. Price blew straight through it. You got stopped out, and then, within the same session, you watched price retrace back to that exact level and stall there. The level that just destroyed your long trade is now acting as resistance. Something changed. The zone didn't disappear when price violated it. It flipped. That flip is called a breaker block, and understanding it means that a failed order block is not a loss of information. It is new information. The zone that just stopped you out has become one of the most powerful short entry zones in the system.
A breaker block is an order block that has been violated and flipped. When price breaks through an order block rather than respecting it, that OB transforms into a breaker block with opposing polarity. A bullish order block, where you expected price to bounce higher, becomes a bearish breaker when it is broken. It now acts as a supply zone, resistance rather than support. A bearish order block, where you expected price to reject lower, becomes a bullish breaker when it is broken. It now acts as a demand zone. The zone location is the same. The polarity has reversed.
The transformation sequence has 3 stages. Stage 1. Identify the original order block, the last opposing candle before an impulsive move. Mark it as you normally would. Stage 2. Price returns to the OB but does not respect it. A candle closes beyond the full body of the OB. This is the violation. The OB is now invalidated as a support zone, but do not delete it. Immediately reclassify it as a breaker block and change its color in your chart system. Stage 3. When price later retraces back to the breaker zone, it should now act as resistance. The former demand level has become supply. That is the entry opportunity.
The bullish OB to bearish breaker flip is the most common breaker configuration and the one that traps the most traders. The sequence: a bullish order block forms. Price returns to it. Instead of bouncing, a displacement candle closes below the full OB body. The zone is violated. That zone is now a bearish breaker. When price later rallies back to that same level, it is now returning to a supply zone. Institutions who are now short are defending that level. The PA confirmation at a bearish breaker is a bearish candle closing back below the breaker zone, the wick through, body out pattern. That is your short entry.
The bearish OB to bullish breaker is the mirror. A bearish order block forms at a swing high. Price returns to it, and instead of rejecting, a bullish displacement candle closes above the full OB body. That zone is now a bullish breaker. When price retraces back to that level, it acts as support. The former supply zone has become demand. Institutions who got stopped out of their shorts at that level are now buying when price returns. The PA confirmation for the bullish breaker entry is the same logic in reverse. A bullish candle entering the zone and closing back above the breaker upper boundary. Mirror logic. Always.
Breakers are among the most powerful zones in the SMC system for 3 compounding reasons. First, they occupy the same location as a proven OB level, a level that has already demonstrated institutional interest. Second, the violation that created the breaker swept the stops of traders who were trading the original OB. Those stop orders became the liquidity that funded the institutional move through the zone. Third, price returning to a breaker must pass through the zone that just swept an entire population of traders. Those traders are now reluctant to re-enter at that level, creating a vacuum of opposing orders. Less opposition at the zone means stronger and cleaner reactions.
The violation criteria are specific. A wick that enters the OB zone and closes back inside does not constitute a violation. The zone remains a valid order block. A candle whose body, the open to close range, closes beyond the OB boundary is a confirmed violation. The full body must close beyond the zone for the flip to be valid. This mirrors the BOS rule from video 2. Close matters, not wicks. A wick through is a test. A body close through is a violation. Once the violation closes, the zone reclassification is immediate. You do not wait. You mark it as a breaker at the next candle open.
Not every violated OB produces a tradable breaker. The decision tree? After a violation, 2 outcomes are possible. Outcome 1. Price continues aggressively in the direction of the violation and never retraces to the zone. This is a failed OB, no breaker trade. The zone is consumed. Outcome 2. Price later retraces back to the violated zone and stalls there. This is the breaker setup. The retrace is your signal that institutions are defending the flipped zone. When you see price returning to a recently violated OB level, shift your mindset. You are no longer looking for a continuation of the original OB logic. You are watching for the opposite reaction from the same level.
The PA confirmation for a breaker entry is the wick through, body out pattern. This is the definitive rejection signal at a breaker zone. The candle enters the breaker with its wick, testing the zone, triggering any remaining orders at that level. Then the candle closes back out the way it came. The body closes beyond the breaker boundary, away from the zone. For a bearish breaker, the body closes below the lower boundary. For a bullish breaker, the body closes above the upper boundary. The wick through, body out combination is the PA confirmation that the breaker is defending its polarity. This closed candle, not the wick, not the open candle, is your entry trigger.
Let me walk through identifying breakers on a live chart. I scan my existing OB zones first. This OB here, originally bullish teal, had a candle close fully below it 3 days ago. I saw the violation when it happened and immediately reclassified it as a breaker. I changed the color to purple and noted the body close level. Price is now retracing back to that zone. I am watching for the wick through, body out confirmation candle. And here it is. Wick enters the zone, candle closes below the lower boundary. That is my entry signal. Short entry, stop above the breaker upper boundary, target at the next SSL level below. Same process for this bearish OB further along the chart. Violation, reclassification, retrace, confirmation.
Here is everything from video 8 in one place. 1. A breaker block is a violated order block with its polarity flipped. 2. A bullish OB that gets broken becomes a bearish breaker. It now acts as supply. 3. A bearish OB that gets broken becomes a bullish breaker. It now acts as demand. 4. Violation is confirmed only when a candle body closes beyond the OB boundary. Wicks through do not qualify. 5. The entry trigger at a breaker is the wick through, body out pattern. The candle enters the zone with its wick and closes back out the way it came. That is Phase 2 complete. Every SMC zone covered. Phase 3 connects everything to price action confirmation. The free resource is the OB to breaker flip tracking sheet, a printable one-page PDF with the OB violation criteria checklist, the polarity flip classification guide for both flip directions, the wick through body out confirmation diagram, and the breaker versus failed OB decision flow chart. Link in the description. That is Phase 2 complete. Order blocks, fair value gaps, and breaker blocks. Every SMC zone in the system. Phase 3 is where the zones connect to price action. Video 9 is candlestick confirmation, the PA signals that turn an SMC zone from a location into a trade. That video is the bridge between knowing where and knowing when. Link at the end.